Hi, and welcome to Inside CalSTRS Investments, a periodic look at how educators' contributions are invested for the benefit of California teachers. I'm here today with Chris Ailman, the Chief Investment Officer of CalSTRS. Welcome, Chris.
Hi, Mike. Good to see you.
So our investment returns for the year are in. How did we do?
First, I want to start with the 3-year and the 5-year return, because I really want people to realize that a 1-year number, it really is like measuring a 1-mile pace in a marathon. We have a 30-year investment horizon. So over 3 years, we produced 12%. Over 5 years, 11.9 net of our costs. Our 1-year number was a slower pace, so it's like we ran uphill. And I always point out to people, last year was the 6th year of the bull market in the United States. They usually only last 5 years, so we're already kind of long in the tooth. Last year was a lower year, only about 4.5% for our fiscal year.
And is that because the stock market sort of slowed down?
Exactly. The market's been in a very seesaw pattern back and forth since June of last year. Our year runs July 1st to June 30. And it was a very choppy year for the market. While it hit new highs during the year, they weren't very much robust new highs. The U.S. economy is doing okay. But again, it's a U.S. equity market that's running a bit old and a bit long and slow, and that's what we kind of expected.
Well, despite that sort of flat return, we did have some bright spots in the portfolio, for example, real estate.
Yeah, real estate produced a double-digit return. Private equity almost produced a double-digit return. So the longer-term investments are now paying off again. If you think about it from the global financial crisis, the immediate thing you saw recover was when the Fed added money into the stimulation of the economy, was stocks improved dramatically. But now longer-term investments, and our members are going to see that on their home prices. Home prices have stabilized and risen, certainly in Southern California and in San Francisco. And we're seeing that in our commercial real estate portfolio with a double-digit return, and even in our private equity portfolio where we're owning companies and they're improving in value.
So the long-term outlook continues to be good for the big ship that is CalSTRS Investments?
I'm very optimistic. It's still going to be choppy seas. We're going to have issues like this year with Greece and obviously the volatility that we saw in China. So it's not smooth sailing. But I think there's no question that the U.S. economy is on a nice stable footing, which is really what's a big part of our portfolio. And we're seeing, as I mentioned, the long-term investments come through that we make. So we think it's going to be, again, a tough year to make really high double-digit returns, but also a year where many of our investments will pay off for us. So we're optimistic. And again, that pace that we're trying to achieve, we've earned about 7.6% over the last 20 years. Our goal is just to continue that over time. We'll have slow years like last year, but then we think we'll have some double-digit years like we saw the year before.
With the goal, of course, to create that 7.5% return over time.
It is very big and very bold in my staff's and in my eyes all the time. Is year in and year out, we're trying to average 7.5, but we also recognize that, like a run, you're going to have good miles and then slower miles. So we're looking for long-term investments that produce a cash flow, but also grow a little bit. So it's going to be a challenge. We realize that, but we also disagree with some of the skeptics that say it's a permanently low return environment. I go back and look at over the last 5 years where we've had a double-digit return in the portfolio. So it's really measuring the U.S. economy and how healthy it is.
Okay, well, thanks for joining us today, Chris. You've been watching Inside CalSTRS Investments.